All right, on Friday, as the markets closed, or actually a little bit after the markets closed, Moody's, the rating agency, downgraded US debt from AAA to AA1 for the first time in history. Now, the issue with this is that usually when rating agencies downgrade countries, this can cause massive havoc on the market. And in fact, if you look at the last time this happened, the market went down 11% in 2 days and took nearly 4 or 5 months to actually get back to where it started. So downgrades are a very serious thing. And this time, Moody's downgraded the debt after the markets closed. So I guess it's all eyes on the US market today, or the US futures opening. Today is probably the most crucial US futures opening because we don't know what's going to happen to the S&P 500. So what I want to do in this show is I want to break down what this downgrade is about. And I want to break down whether we should worry or whether there's a massive opportunity that we can actually take advantage of. So if that sounds good to you, what I need you guys to do is I need you to subscribe to Crypto Live. It's our other channel. And when we do like other live shows and stuff like that, we need people to subscribe to Crypto Live because I'm going to start doing a lot of shows on this channel. So if you're here and you're here for the alpha, subscribe to the channel, obliterate the like button because that's what lets other people know that we are actually here. And I'm going to get the show on the road. And then later on, Fefe is going to join us and do some charts. So let's go, guys. Nice to see you guys on Crypto Live, and nice to see you guys on an amazing green Sunday. In fact, if we close at these levels, we could actually, if we go up a little bit higher, if we go up to like 106, 166, that would make this Bitcoin's highest weekly close ever. Yeah, you heard that right. And it looks to me like the bulls are starting to try and fight to get there, but they got to be very careful. The reason why they got to be very careful is because on the horizon, there is one of the most crucial US futures openings. As I said, it is really one of the most crucial US futures opening. And that is because it's the first opening since Moody's downgraded the US debt. And they did this after the markets closed, which some analysts say was quite a sly move. Like, you don't downgrade the debt after the market closes on a weekend because you know that can cause havoc in the market. So we're going to analyze everything. We're going to break it all down. I'm going to show you why I think there's actually a very big opportunity here and what most people are actually missing. It's going to be amazing. It's a Sunday alpha. Generally, I wouldn't come to you on a Sunday, or if I did, I'd come to you on the other channel. But here, because Dylan's going on the other channel later, which by the way, you should all go and watch, I came to you on Crypto Live. So what I need you guys to do, there's going to be a lot of times where I have to come to you on Crypto Live just because other people are using the other channel or because there's other shows in the way and stuff like that. You need to subscribe to this channel because a lot of the alpha is going to be dropping on this channel. So if you're not already subscribed, just subscribe. Trust me, put on subscribe and hit the notification bell. And then, yeah, I'm going to get onto showing and obliterate the alpha. You need to obliterate the like button. I'm going to obliterate the alpha. Anyway, let's get going. So let's talk about this downgrade and what this downgrade actually means and whether or not we should be worried about this downgrade. And in general, I would say, yeah, look, we possibly could have worried, but there's a lot of factors here that actually make this downgrade a little bit different from the last downgrade where the markets actually went down quite a bit. In fact, it's not the first time that this has happened. In fact, if you look here, you can see that there was a downgrade in 2011 by S&P. Then the markets went down quite a bit. It took them a long time to actually claw their way up. And then there was another downgrade by Fitch. So let's talk about what these downgrades are and what they actually mean. So first of all, we need to understand who these rating agencies actually are. There are there's many rating agencies in the world, but there are three major rating agencies in the world: S&P, Moody's, and Fitch, right? And actually, you'd be surprised to hear that actually companies and countries actually pay them to analyze and rate their debt. And the reason why countries and companies pay them to rate their debt is because unless you have a debt rating, most funds can't invest in you, right? And then depending on your debt rating, whether you're a country or a company, certain funds can and can't invest in you. So let me give an example. There may be some funds which say, hey, we can only invest in debt of countries that have AAA ratings, or we can only invest in anything that's investment grade or upper medium grade or higher grade, etc. And we are not allowed to invest in non-speculative or non-investment grade or speculative instruments. So without this rating, funds cannot invest in your debt. And so I always find that ironic, because sometimes companies pay them to rate them, and then they give them a bad rating. And then as a result, the company can't really raise money anymore, but they went and paid for this to happen. But without this rating, you cannot get invested in. And so there are three major agencies in the world that do this: S&P, Moody's, and Fitch. Now, if you look at the highest debt rating that you can have, it's a AAA rating. And then if you go down one level below that, you go from prime grade to high grade, and Fitch and S&P call that AAA plus, and Moody's calls that AA1. So AA plus and AA1. So Moody's has got a slightly different notation, but ultimately it means exactly the same thing. Now, I mentioned to you at the beginning that the company that downgraded the US this time was actually Moody's, okay? And it's the first time in history that Moody's has actually downgraded the US. Now, I mentioned to you also that the US debt has been downgraded before. And that's because the US debt was downgraded before by the other agencies. So the first time that the US debt was downgraded, it was actually downgraded by, I forget who was first. So S&P was first. That was in 2011. And then in 2023, I think, in 2023, Fitch also downgraded the US debt to less than the premium. And so Moody's is actually the third agency to downgrade the US debt. You see where I'm going with this already, right? Two of the three agencies had already previously downgraded the US debt, and the third agency is now downgrading the US debt, right? So two have already done it. The third agency has already just done it. And that's something that we're going to talk about. So what do these agencies look at? Well, they look at your debt. They look at your GDP. They look at how likely you are to repay your debt at some point in the future. That's pretty much what these agencies are looking for. How likely are you to repay your debt in the future? So they look at the US's debt, and they look at the US's net interest cost. And then they kind of say, look, what is the net interest cost to the GDP of the country? And based on that, they decide whether or not you are likely to pay their debt. So for example, they look at Argentina, they say, look, 83%, so just, get this, 83% debt to GDP ratio, which is like, that's a crazy number. That means that the amount of debt versus 1 year of gross domestic product is 83%. If you go all the way down to the United States, 124%. So they have their debt to GDP ratio is 124, which means that their debt is now higher than 1 year's GDP, which is very scary. And that's kind of like what they actually cited as one of the problems. So let's look at what actually happened. As I mentioned to you, it's not the first time that the US has been downgraded. In fact, it's been downgraded by both other agencies. They downgraded them. In 2023, Fitch downgraded the US from AAA to AA+. They cited concerns over the US's rising debt levels, unaddressed fiscal challenges, and Fed rate hikes. So it's not the first time that it's actually happened. You can see why they cited it. Following the Fitch downgrade, the US S&P 500 fell 10% in 3 months. The Russell, which is the smaller index, fell 17% over the same period, largely because of the concerns cited in 2023, primarily being focused around debt. This is exactly what Moody said in their downgrade. Eventually, what Moody said is, they said, look, the USA is hitting an unsustainable path. They cannot carry on spending so much and taking on more debt because their debt to GDP ratio is actually becoming scary. And effectively, they said the US is on an unsustainable growth path. They also said that the federal debt burden will rise to about 134% of GDP. Imagine that the federal debt burden, meaning that the amount of interest that the country has to pay, the interest payments would absorb 30% of US revenue, up from right now 18% of US Interest payments would absorb 30% of US revenue of debt levels rise this high from 18% now. So they're kind of saying, if you carry on doing this, your interest rate repayments are going to get so high that eventually, if you were a company, you'd actually go insolvent. And that's effectively what they've been saying. The reality is, though, so I just want to give you some perspective. So if you look at some other countries' ratings, let's look at some of the other countries' ratings. So Australia has a AAA, Canada has a AAA, Denmark has a AAA, Germany has a AAA, Liechtenstein has a AAA. All of these countries have a AAA. So again, let's just go through the countries. Australia, Canada, Denmark, Germany, Liechtenstein, believe it or not, Luxembourg, Netherlands, Switzerland, Norway, Sweden. Those are the only countries in the world that actually have, and Singapore. Those are the only countries in the world that actually have a AAA rating. And this is one of the important things that I need you guys to remember. So they looked at the US, they looked at the amount of debt, they looked at the debt to GDP ratio, and they basically said, look, if your debt carries on growing like your debt is growing right now, you ain't going to be able to pay your debts. Or it's going to put a huge burden on your economy, and therefore it's not really sustainable. And therefore, your debt is actually not worth that much anymore. Okay, so that's the reality. And, you know, I was actually wondering last week, for those of you who've been following my Twitter, and for who, of course, a lot of you have been watching my show. I hope a lot of you have been watching my show. And I kept asking, what is the most plausible explanation as to why Treasury yields were exploding? I just couldn't work out why inflation is high, inflation is low, the Treasury yields go up. That the Treasury yields were going higher and higher and higher, and I just couldn't work it out. And now we kind of know, because when debt is downgraded, right? When your debt gets downgraded, and you can see that there was a little spike over here. When your debt gets downgraded, you have to pay people more interest to take on your debt. You have to pay them what's called as a risk premium. So companies with lower ratings need to pay higher interest in order to woo people to actually give them a loan. So almost like, think about it like individuals, right? If you've got a bad credit rating, I'm going to lend to you, but I'm going to charge you a higher interest rate. And so the reason why yields were spiking is because somebody obviously knew that there's a downgrade coming. And when downgrades come, generally you would have to pay more interest as a country, because if your debt is subordinated or the level is going down. Now remember that what Trump is trying to do, Trump knows that he has this debt to pay. And what he's trying to do is he's trying to reduce the yields. Now imagine he's trying to reduce the yields, and now they're saying, hold on, there's a good chance that the US isn't actually going to pay you back. We've actually downgraded them. So some people have actually said this could actually be political warfare. But it's not political warfare. And let me explain to you why it's not political warfare and why it actually doesn't even matter. Remember I said to you in the beginning that based on your credit rating, certain funds can hold and cannot hold your interest. So in other words, there are certain funds that say, look, if any country is not AAA rated, we can't hold their debt anymore. Now, what that means is that those funds, when the market opens today, would have to effectively dump US debt, right? Imagine a scenario where there's funds holding trillions of dollars of US debt, and they're not allowed to hold any debt that's not AAA rated. Imagine what would happen. As the markets open, they would have to dump algorithmically, they would have to dump all their US debt, which is actually exactly what happened. Now, let me make it even worse. There are some equity funds that say we are not allowed to hold equities in countries where the credit rating is not AAA. So it's a big thing. It's like a massive thing. But in this case, I actually think that it's an absolute nothing burger, barring one or two caveats. So let's talk about why I think it's a nothing burger, barring one or two caveats. The first thing is, I want you to understand that some funds rely on Moody's, some funds rely on S&P, and some funds rely on Fitch, right? So some funds will say, look, we count on Fitch ratings, and we can only invest in funds in countries that have a high Fitch rating. But when it comes to countries specifically, they say that if any two of the three rate you something, then that is effectively your rating, right? That most funds basically say if 2 of the 3 tell you that the US is not the highest level, then the US is deemed not to be the highest level. Now, remember what I said to you in the beginning. I said to you that this is not the first time that it's happened, but actually S&P and Fitch have basically downgraded the US already, which means that for most funds that hold this debt, or for most investors, they have been looking at the US as the non-premium, or what do they call it, the non-prime grade, and they've just been looking at the US as high grade debt, as opposed to prime grade debt. Because, as I said before, you have 2 of the rating agencies that have already downgraded the United States. Second of all, and this I got from a tweet from 𝗕𝗬𝗕𝗏𝗧, which I think was a very, very good tweet. He said, look, in August 2011, the S&P went first and downgraded the US from AAA to AA+. All hell broke loose. The reason all hell broke loose was because a lot of derivative contract, loan agreements, investment directives, and the like prohibited non-AAA securities. The fear was treasuries were not eligible collateral. In other words, sometimes they used the treasuries as collateral, but the minute that it dropped from AAA to AA, they were not eligible for collateral, and that liquidated markets. In years after 2011, those contracts were rewritten to say that government securities, excluding the qualifications of the credit ratings. In other words, if it's a government security, the rule doesn't apply. That's why in August 2023, when Fitch downgraded the US to AAA+, the USA became a split-rated country. The downgrade had almost no effect on the bond market, right? The last of the rating agencies, Moody's, pushed the US down to AA today. So technically, it didn't even change the US's overall credit rating because it was already a split-rated AA+, now to unanimous AA+. Bottom line is, this won't force anybody to do anything when the market actually opens on Monday, right? So it's a little bit of a nothing burger. It is a little bit of a nothing burger, but there are some implications. So again, why is it a nothing burger? One, because the funds are not going to have to dump it because those rules have actually changed. And 2, because they've already been a split rating. Josh, you know, whenever I sit up, like my hair gets cut off, and it took me so long to do my hair, bro. So, and I want people to see it. Okay, good. While Josh is doing it, guys, I'm reminding you, while Josh is fixing my hair for me, what I need you guys to do is subscribe to this channel, because I'm going to be coming onto this channel a lot. I'm going to be bringing you a lot of alpha onto the show. I may even move my show to this channel for a thing. Also, let me know if Banter was getting a rating. Would I get a AAA, an AA+? Tell me in the comments what kind of rating you would give me on this amazing show here on a Sunday. All right, so I think it's going to be a nothing burger. Why is it going to be a nothing burger? Well, for one, the US has already been split rated. Now it's unanimous rating. For 2, the algorithms aren't going to sell because government debt is included. And 3, which is probably the most important, is, look, maybe the US debt isn't rated as prime anymore. Okay, fine, that's fine. Then I have a question for you. The question is, if you were a fund and you were mandated to buy debt, which debt, or a country, and you were mandated to buy treasuries, which country's treasuries would you prefer to hold rather than the USA? And let me give you the list of countries that are still AAA rated. So the first question is, would you rather hold USA or Australia? Would you rather hold USA or Canada? I mean, Canada might even be annexed by the US. Would you rather hold USA or Denmark? Denmark probably you can't even buy that much Danish debt. Germany, Liechtenstein, Luxembourg, Netherlands, Switzerland, Norway, or Sweden, or Singapore. All those countries are so small, and I mean, honestly, they don't own the reserve currency of the world. And therefore, it doesn't really matter, because even if the US doesn't have a AAA, where else are you going to park your money? It's the best big rated debt that is available. And so all it does is just moves the whole tide a whole lot down. Anyway, be that as it may, Scott Bessent has come out and he has started to comment on the rating. And he has started to slander Moody's and say, I don't put much credence in what Moody says. They're a lagging indicator. He came out on CNBC. I'll play you some of the things.
I think that Moody's is a lagging indicator. I think that's what everyone thinks of credit agencies. Larry Summers and I don't agree on everything, but he said that when they downgraded the U.S. in 2011. So it's a lagging indicator. And just like Sean Duffy said with our air traffic, we didn't get here in the past 100 days. It's the Biden administration and the spending that we have seen over the past 4 years. We inherited 6.7% deficit to GDP, the highest when we weren't in a recession, not in a war, and we are determined to bring the spending down and grow the economy. I think
so. He's saying, look, it's a lagging indicator. We are determined to bring the spending down, and we are determined to grow GDP. It's not the first time he said it. I'll play you this.
There is the growth, the potential growth of the debt, but what's more important is that we grow the economy faster. So what we've seen under the past 4 years, and what we inherited, I inherited 6.7% deficit to GDP, which was the highest deficit when we were not at war, not in a recession. So we've been trying to bring down the spending, and we are going to grow the revenue side. So we are going to grow the GDP faster than the debt grows, and that will stabilize the debt to GDP, which even Secretary Yellen and I agree is the most important number.
Okay, so you now know that he's come out. He said, look, it's a lagging indicator. We inherited a bad economy. We're going to change this. He came out on a Sunday and he said this. So why did he come out on a Sunday and say this? Because there is one little booby trap here that we need to be careful of. Otherwise, I think it's an absolute nothing burger. Bitcoin is telling you that it's an absolute nothing burger. If you look at the Bitcoin chart over here, you can see Bitcoin's telling you it's an absolute nothing burger, right? But there is one thing that we do have to watch out for, and that is the Treasury yields when they're open. So tonight, in the morning or wherever you are in the world, right? You need to watch what happens to Treasury yields, because if Treasury yields spike, remember, Trump is trying to get Treasury yields down so he can refinance the debt. It doesn't help him that a rating agency is coming out and saying, your debt's about a bunch of horseshit. It's now going to get downgraded. Doesn't help him, his interest rate mission. So I would say that today we have to watch the futures opening. When we watch the futures open, actually, we're not going to really watch the stock markets. You need to watch the futures opening on the 10-year Treasury yield, right? And that's going to give you the signal as to which way this market's going to go. If the 10-year Treasury yield spikes, I would be a little bit careful. But that's it. I think it's a nothing burger. And I think that markets shouldn't treat this as anything. However, you never know. And certainly, in the short term, after a weekend when there's not a lot of volume, crazy things can happen. So if you're holding leverage, just be careful. Just be careful that there's no leverage flash or something stupid like that. But is this a big thing? Abso-fucking-lutely not. And I told the guys in the front runner group yesterday, I said, it's not a big thing. Don't even worry about it. Don't really worry about it. But just make sure if you got leverage, just make sure you don't get caught with your pants down on leverage positions. Because you know what happens. You get those liquidation wicks and then you basically get destroyed. Anyway, before we go, we're actually going to do some charts. But before we do some charts, I need you to do two things. I need you to subscribe because, as I said, I'm going to be on this channel quite a bit. And I need you guys to subscribe so that when I come on this channel, you can see it. I also want to bring on Fefe, the man with the money. Where's Fefe, the man with the money? I see a black screen, bro. So it's supposed to be Fefe, the man with the money, and I don't see him. Can you see? Can anybody see Fefe? Oh, he's rejoining. Okay, so Fefe is rejoining us. While Fefe is rejoining us, let's degen a little bit. I mean, we're here. We may as well degen, right? Let's look at the altcoin market. Let's actually see what's actually running. Looks like Base is having the time of its life. Virtual Brett. If Virtual and Brett are running, you know what you should be buying? Take a guess. Aerodrome, people. Aerodrome. Let's see what Aerodrome's doing. Aerodrome. Cheap as fucking chips. Cheap as chips, this thing. 60 cents. Cheap as chips. Athena running. Up 12.8%. The meme coins running. If the meme coins are running, you know what you need to be buying, ladies and gentlemen? You need to be buying Radium because that's where people trade meme coins. You know what else we should be looking at? We should be looking at Launchcoin. Let's look at Launchcoin. How's Launchcoin doing? Launchcoin. Oh, look at that. Look at okay, $250 million market cap. That's amazing. Let's see in the next 100 what's actually happening. Oh, Fefe is here. Fefe. The man with the money.
Yes, bro.
What's happening, bro? I can hear you, bro.
Been here from watching your show in the background here, but I can't hear you now.
He says you can't hear me, bro. Is it possible that Fefe, the man with the money, can't hear me? Nah, impossible.
See this here. Can you hear me?
I can hear you, sir. Can you hear me, sir? Okay, we can't hear Fefe.
I hear you. I hear you. I hear
you.
You
hear me, Fefe?
Yay!
The man with the money. What do you think is going to happen today? What do you think is going to happen today when the futures open? When the futures open in a few hours? So you got.
I've been sitting here in the background. I've been listening to your whole thesis, and I think it's awesome. I think that people need to rethink. Ultimately, I was expecting this pump, but I also think we should be very careful. There is another flush coming at some point. You know it as well. The question is when and how deep. But I think the up-only season started. To be very honest with you, like if you look back at daily recoveries. And you look at the daily chart. I actually shared. I don't know if you can see.
Let's see if we can share. Let's see if we can share. See your.
So multiple things. Now I see the Phoenix playing. I don't know if that's you guys see the Phoenix just going.
Okay. Oh, then okay. Now is that your screen, bro? Can you share? Can you share us on your screen?
I have shared my screen. I don't know what you see.
Josh, bro. There we go. We can see your screen.
There we go.
Fefe, we can see your screen. Okay, tell me what you're seeing on the charts, my brother.
Couple of things. One of the things I wanted to say that 2023, right, was August 1st was when Fitch downgraded. And we've seen a couple of days of consolidation, like for 1 or 2 weeks. So if that happens now, I do think that a flush is going to happen most likely. If you look at it last time, 2023, although your reasoning is absolutely fine, it's not the same. But the total and Bitcoin dumped about 15%. That's important here that if you look at the previous recovery here, so if you look at a daily recovery here from this whole March 2024 consolidation all the way down here, you look at a recovery. Once you made a daily high, that was up only. There was a banana zone happening. There was no retraces. Usually markets retrace 50%. You see it multiple times. Now, if we consider the fact that we do have basically a V-shaped recovery on the daily here, which you see here, a very similar scenario, this should be up only. Up only means that you have these rally, you have a little bit of base, you have another rally, you have a little bit of base, another rally, which we have seen previously. But what I always say and what I always expect is that when we are in a trending market, we do have to get a 50% pullback. And whether we're going to get it on the 4-hour chart, which actually just happened here, we had a little bit pullback here into this point of interest, and then we just bounced from there. We have a 4-hour high. It's a clear long here. Like if I would have to take a guess, and if I just disregard from the downgrade news, this should be a simple buy. We have a daily high, or what is it? We have a 4-hour high here, which basically confirms, again, a V-shaped reversal. This low here on the total should hold. And you can look at most of the coins. You can look at Bitcoin having the exact same structure here. It should hold. So the 4-hour structure should hold, which is down here at 100K on Bitcoin, should hold. But I want to give you another perspective, because I do think that we are going to see a pullback, and it would be just way too easy, especially considering all the uncertainties. Maybe that comes 90 days after we still have the China and the tariff news, hanging up above us, seeing whether they're going to have a deal or not. There will be any uncertainties. What did Besson say? He said it was an unfortunate escalation. So if we're going to get that, obviously that's going to impact the markets. But if we consider the fact that there is going to be a pullback, and we accept that there is going to be a pullback, here's what I would be looking at. On the daily chart, the first area that I would be looking at, I'm actually going to open up the Bitcoin chart so it's easier for people to understand. The first area I would be looking at is down here about the 98K. If we get this, I do think if the market dumps, as you have seen in 2023, the S&P was down 7% on the day when last year was downgraded. If we get that, this is actually the pullback you want to buy. So if we dip below 100K and people start calling for a reversal because we did below 100K, that is a pullback to buy, but not blindly. So I would actually wait for a little bit of a higher high here. So I would want to see us come down to the 99,000 region, just wick below 100K, see a higher high on the hourly chart, very similar to what you see here, and then it's the banana zone again. So I hope it happens. I scaled out of 60% of my positions on leverage. I agree with you that I think a flush can come, and you just want to play smart.
I'm not worried. I'm just worried about. I think by tomorrow, by close of business tomorrow, everything should be okay. I'm just worried that markets are opening at Sunday night in some countries. In some countries, it's the morning. A lot of people are trading on algos. So just think about like an algo that. Think about a US trader went left, because remember this came out at 4:45 p.m. Markets closed 45 minutes already. An algo trader's gone home. Think about it like an algo trader goes home, and then Sunday night the futures market opens, and I don't know, maybe somewhere in the algo it says that you can't hold AAA debt, or you can't hold AA+1 debt, or whatever it is. And then it's like, oh fuck. Okay, then there's a cascade of liquidations and stuff like that. So I'm not expecting.
Ultimately, I'm very comfortable buying. I'm very comfortable buying.
Yes.
So
yes,
even if we get a 10% dump, I think it's something that you just have to buy. I think we're out of the woods, most likely out of the woods. And if you look at some of these structures, which brought up Sui here, which are long. If you look at this, like again, the 50% structure on most major, like that was a trade we took on hype. Let me just show that chart. Like most of the tokens actually have, even though the total didn't pull back, that's why I would expect a pullback still. But if you look at hype, like most of these tokens had a very beautiful pullback to this 50% region. Look at this. So it has a beautiful structure here. And these pullbacks happen on the chart. Like you have a push here and then it comes back 50 right into this, structure. Now I know I just drafted everything on the chart, but like you have the high, you have a low, you have a high, you have a pullback, you have a beautiful structure. And if we keep that structure, meaning we don't break below the 4 hour, it's no matter what pullback happens, it's a buy.
Yeah, I agree. Look, I agree that for now we're in up only season. I did, I think that I think when I say up only, in general up only, but we're going to have some down days. I was just worried that when the futures open today, some people actually get flushed out, but it feels to me like the market's pretty strong now. I think the market's pretty strong now. I must say, I think if you are in the US, it'll be a very, very, very fun futures to trade like at that time. I think for other people, it might be a bit late depending on which country in, but I think it's a very, very, very fun futures to trade tonight, because there's definitely going to be action tonight. That's for sure. Fefe, I just want to quickly look at maybe while we're here, because we're not together a lot. And actually, the next time we're going to be together in person, bro. In Hungary, we're going to be at your wedding. I'm so excited to go to Hungary, bro. I'm so excited to go to Hungary. I'm actually thinking of even coming. I'm actually thinking of coming a day earlier and then having like a banter meetup, bro, in Hungary.
Yeah.
In Budapest. Yeah, in Budapest.
But I'm telling you this. You know how long I've been telling you this for? It's the center of Europe, bro. It's like 3-4 hours, everything. We should have a banter meetup here. It's beautiful. It's incredible.
Agree. But let's quickly just look at some of the altcoins. I see, as I said, I think the base coins are running, Virtual's running, Brett's running.
I wanted to rank. Can I give you one more thing here, which I think will help a lot of people position themselves?
Yes.
So if you look at the 50, I actually posted this, and I said, where is it? Like I said, elevator. I have this concept called elevator up, stairs down.
Yeah.
You always want to be on the elevator. So if you look here, this is the moment I was like, elevator up, stairs down. If you look at the 15-minute structure, the 15-minute low is basically down here at like 3.24. I'm looking at the total market cap. So all this leeway for the US Open to go. If we don't break below the 3.24 trillion, we're good. So that gives us about a 2% dump, which is, again, might be considered low. But if you look at the total market cap at 3 trillion, that's like 60 billion to go down here. So if anybody's trading the Open, I would expect this to come back to 50 at least. So I would expect this to come back to 3.28. But if we don't break below, just long. Just go long. And anytime you see a 5-minute higher high, just take that long, because it can really, really escalate. And also, traders who are expecting this now, they are just getting ready. So everybody's waiting, I think. Everybody's preparing for the uncertainty. If the market starts making a new high, if there is a quick flush and there is volume coming in and there is big green candles, everyone will get long. So I think it would be no surprise to wake up tomorrow to a massive, massive price action.
Amazing. All right, so we'll let you guys know if we're going to do a meetup in Budapest on the Friday before Fefe's wedding. That's the first Friday of June, right?
Yeah, my wife will be very happy. But I'm down. I'm game.
She'll kill you. I'm going to Vegas, bro.
Oh my goodness. I told her, look, I have to go.
I do see the memes are running again. Like, I really wish the memes would stop running as the first things. Except, hold on, 𝗕𝗄𝗃 is running. That's a nice one. This is, 𝗕𝗄𝗃 it's a very fast blockchain, and it was actually invested in by 𝗕𝗟𝗏𝗃. 𝗕𝗟𝗏𝗃's actually the big money behind this. Did you know that? I don't know if you knew that, but actually, this is 𝗕𝗟𝗏𝗃 money. This is serious 𝗕𝗟𝗏𝗃 money, bro. All right, bro.
What's the ticker?
𝗕𝗃𝗃𝗃. It's a 𝗕𝗃𝗃𝗃. This thing's been on a tear. 𝗕𝗟𝗏𝗃's money, bro. 4x in a month. 4x in a month.
Really?
Yeah. I'm actually quite heavily invested in it. I'm quite heavily invested in it, to be honest. All right, brothers and sisters. Remember, if you're not already subscribed, hold on, wait, I didn't mean to lose Fefe. It's
and I'm here every day, Ran. You're missing the point. I'm here every day
I
on
know,
Crypto Live.
I know. Guys, Fefe is here every day. I think I'm going to start coming here every day also. If you haven't already subscribed, subscribe so you can see us here when we here every... Go. Subscribe. Come on. Obliterate. I'll see you guys again tomorrow on the normal channel. Maybe I'll come and hang out here. Who knows? We'll talk about it tomorrow. Until then, sending you guys much love and trade well, my friends.